Welcome. In today's video, we want to look at understanding how to process output and input value-added text on QuickBooks Enterprise. We are doing this video because the way you treat value-added text on QuickBooks is different from the way you treat it on QuickBooks Premier. If you are using QuickBooks Premier, you don't have to watch this video. But for those who are using QuickBooks Enterprise, this video is for you. So for us to get started, we are just specifically going to explore two critical components of value-added text, that is output VAT and input VAT. And to make this more concrete, we'll use an imaginary company, Fresh Tech Gadgets, to illustrate how these concepts work in practice. So first, let's start by defining what is value-added text. Value-added tax, commonly known as VAT, is a consumption tax placed on products whenever value is added at each stage of the supply chain from production to the point of sale. VAT is ultimately borne by the consumer, but is collected at each stage of the supply chain. Then let's look at what is output VAT. Output VAT is the tax that a business charges its customers. So this is VAT on sales. The business is charging its customers whenever it sells goods or services. It is essentially the tax on the sales revenue. So this is tax on sales generated by the business. Then what is input VAT? Input VAT is the tax that a business pays on goods and services purchased from other businesses. This VAT is recoverable, meaning the business can claim it back from the tax authorities. In this case, it's the Zimbabwe Revenue Authority. I'm doing this from Zimbabwe. Now, we're going to use an example to look and see how this is now processed on QuickBooks Enterprise. So we've got this example transaction. For the first transaction, which has got this business is into buying and selling electronic gadgets, and we've got this sale transaction which was done on 3 June 2024. Transaction date June 3, 2024. Customer view Sonic Ventures. Transaction description: Fresh Tech Gadgets sells 20 televisions to View Sonic Ventures. Total selling price 20,000. Output VAT rate 15%. Then the VAT amount 3,000. Then the total amount charged 20,000 plus 3,000 to give us 23,000. Then for the second example transaction, which now is going to do with purchase or purchasing of the televisions. So transaction date again June 3. Supplier Techmark suppliers. Transaction description: Fresh Tech Gadgets purchases 20 televisions, and total purchase amount 10,000. Input rate VAT rate 15%. Input VAT amount 1,500 to give us a total of 11,500. Then for these expenses which were paid for on June 3, Fresh Tech Gadgets incurs various business expenses such as office supplies and marketing services. On June 3, the company spends 5,000 on office supplies and 3,000 marketing services. VAT was charged on those expenses. So on office supplies, we've got a VAT of 700, which is input VAT of $750 to give us a total of 5,750. On marketing expenses, we've got a VAT, input VAT of 450 to give us a total of 3,450. Now we're going to go to QuickBooks and see how do we process this to come up with the VAT payable. So let's switch to QuickBooks. Right. So when we come to QuickBooks, the first thing that we have to do is we've got two things here. We've got output VAT, then we've got input VAT. So we have to make sure our system is configured correctly to compute or to account for those things. So we're going to start by looking at the settings for output VAT, which is VAT on sales. And for you to do that, you just have to come to settings, then you click on preferences, then you click on sales tax. So the system will give you this window. You then click on company preferences. So when you click on company preferences, VAT here, you'd find the system will ask you, do you charge sales tax? This is Enterprise, so it sells sales tax. Sales tax is value-added tax. When you're in Britain or in Zimbabwe, we say value-added tax. But when you're in America, they say sales tax. So we are charging VAT or sales tax. So we have to make sure that yes is selected. If we select no, you'll find all these other fields become grayed out. So we have to make sure that yes is selected. We are configuring output value added tax. When you do that, we have to add a sales tax item here. I had already created it, so I've got this item. If this item was not here, I was going to click on add sales tax item. Then I was going to have this window whereby it will actually ask me to add a sales tax item. Then I could just click there. Then when I do that, I could then come here, give it a name. In this case, it was going to be VAT. I'm not going to add this, I'm just going to demonstrate. So it was going to be VAT. Then the description could be I could put this description as output value added tax, because this one is only going to work on so I've got this on sales. So value added tax. So this is how we're going to add this. Then we're going to put a rate here. In this case, currently the rate is at 15%. So we're going to put that. So we're going to put 15%. Then we're going to select a tax authority. In this case, I had already set it up. So for the Zimbabwe Revenue Authority, so I could select that. If I had not set it up, I was going to click on add new, because I had created the tax authority already. I just selected that. Then I could click on OK. So by so doing, you create the tax, you create the value added tax item, the output value added tax item. So I'm not going to do this because I had already done it. So I'm clicking on cancel, right? So basically, because I had done it, I select it. Then once I'm done, and then just click on OK, right? So we have set up our value added tax item. Now this will affect the sales, but we also have got purchases and expenses whereby we are charged the VAT. So what we have to do now is we have to come here on lists. Then we have to come on chart of accounts. Right. So on chart of accounts, we find we've got this account. I'm going to type and look it up. Sales tax. So I'm just going to type sales, then I'll search. Right. Then for this account called sales tax payable on QuickBooks Enterprise, this is the control account for sales tax or for value added tax. But what it does, this account is mostly it is aligned to VAT or sales tax on sales, right? But it's a control account sort of. So what we have to do is we're just going to add another account called let me just right click. So I can either right click or I can come here and click this arrow pointing down and then click on new. So two options, I can either do this or I can just right click and click on new, right? So when I click on new, I'm going to add an account which is other types, then the current liabilities, then I'm going to say continue. Then I'm going to create an account called VAT on purchases, right? You're going to see what we'll use this account for. So I'm creating this account, VAT on purchases. Then this account, I'm going to make it a sub account. I'm going to make it a sub account of the sales tax payable account. Then I'll just save and close. So basically, I know you've got this account, as I said, it's the control account, but also working as the account for VAT on sales, right? Then I've created another account which is a sub account of this one, but this one is going to stand for VAT on purchases. Now once I've done that, I have to come back again to lists. Then I have to click on item list. Now this time around, I'm going to create an item for VAT on purchases, VAT on expenses. So I could either come here and just click on this arrow under item, then click on new, or I could just right click, then click on new. Now then I'm going to create an item as other charge. This is the item type I'm going to create. I'm going to select. So I'm choosing that. Then I'm going to create an item called VAT on purchases, right? So basically I'm going to create this. Then I have to come here and select an account, right? The account I'm going to select here is the sub account which I created, VAT on purchases. Then I'll click on OK. Right, okay, I had already created this item. As you can see here, it says the name is already in use, please use another name. So I had already created this, so I'm just going to say okay, and then I'm going to click on cancel. I should have this item here. You can see this VAT on purchases. So I had already created it. Probably what I have to do is just to edit, because this account, I'm not supposed to put sales the account there. I'm going to put VAT on purchases. Then I just click on OK. Then I could say yes. So this item is created. Now we have to go on and account for this business and see how does this work. Now the first thing that we have to do, the first transaction that we have, I'm going to come back here and share this screen so that we see the first transaction that we have. The first transaction that we have is a sales transaction whereby on June 3 the business sells 20 televisions to ViewSonic Ventures for an amount of 20,000 excluding VAT, including VAT 23,000. So we are going to process this on QuickBooks Enterprise and see how do we compete for that. So how do we account for that? So I'm going to come back to QuickBooks, share this, then I'm going to come down here. I'm just going to come here, up here, then I'm going to click on customers. We just do it the normal way we do. Then we say create invoices, right? Then when we do that, we are going to have this screen. Then in this case, our customer is ViewSonic, so we're going to add new, right? Then quickly, I'm just going to add our customer, because the customer was not there. So I'm just going to quickly add the customer. It's ViewSonic. I'm not going to put all the details. ViewSonic Ventures. So basically, this is our customer. I've done a video on how to create customers on QuickBooks. So here I'm just going to put in the name so that quickly we complete this. So I'm just copying that and also pasting it under company name. Then I'm clicking on OK. So I've created the customer, and now I'm going to invoice this customer. This transaction was done on 3 June. So I'm selecting that date. Then I'm coming here. I'm putting in the amount, the quantity. The quantity is 20. Then the total value. Okay, the item which was sold is televisions, right? Then the total value is 20,000, meaning to say each okay, let me just go back and see what is our total for the television, so that we appreciate, because each should be costing 1,000, right? Let's share that screen. Let's share the screen, this one, right? So we're saying the total selling price was 20,000, meaning to say these were 20 televisions, meaning to say one costed, in terms of selling, it was sold at $1,000. So we're coming back here, and we're going to share our QuickBooks screen. So here we're just going to put in 1,000, right? So we have got that, right? So our total becomes 20,000 plus the VAT at 15%, which is 23,000. So we have done our invoice. You can see here the text item, selected, everything sorted out. Then we just save and close. This records our sale. So we've recorded our input. If you were to come here and view our reports so that you appreciate what we are doing, we come to reports, we go to company financials. We could start by seeing our profit and loss. If we were to click that profit and loss standard, we could see that we've got 20,000 as our sales, because our sales have to show excluding VAT. So in this case, we've got 20,000 exclusive of VAT, which is correct. Now, if we were to view our balance sheet so that we see the effect of what has happened, company and financials, then we come down here, we view balance sheet standard. If you were to view our balance sheet, you could find we've got an accounts receivable of 23,000, but on the sales tax payable, which is a control account, acting as a control account, also acting as a holder of the input VAT, we have got 3,000. right? So this is what we charge the customer. If we had no other transaction, it means you were supposed to pay this 3,000 to the tax authority. Now we're going to go back and process the other transaction. So let's come back here, share this screen and view the remaining transactions so that we see how do we process them. Now we have dealt with the sale transaction. Now we have to deal with the purchasing transaction. Right, we are told in the second transaction that the business Fresh Tech Gadget on June 3 purchased 20 televisions at 10,000 from Techmark suppliers. Then it was charged the VAT, right? So the input VAT was 1,500. So the total bill for the televisions, the 20 televisions, came to 11,500. So we want to see how are we going to process this transaction and account separately for the purchase price and for the VAT. So we're going to go back to our QuickBooks, right, and see how we process this transaction. So when we come back here, we are just going to close this report, right? Then we also close this report, right? So this is a purchase transaction. So basically, depending on how we purchase this, if we had purchased this on credit, we're going to come to vendors, then we could enter bills. So we could enter bills, or if we had purchased using cash, meaning to say we either paid through a bank or we paid hard cash, we're going to say banking and then we write checks, right? So okay, what am I going to do? I will demonstrate both methods. Let me start with the vendors. So on vendors, it means we're going to, meaning to say, if we say vendors, it means we purchased this on credit. We didn't pay cash. We didn't do a bank transfer. We just bought the goods and promised to pay later on. So if we're in an account with these guys, so we're going to click on vendors, then we could say enter bills. Then in saying enter bills, we're then going to select our supplier. In this case is Techmark suppliers. I'd already created this, right? Then because we are buying items, we've got two tabs here. We've got the expenses tab, then we've got the items tab. But in this case, we are buying physical items like your television. So we're going to select the items tab. Then we come here on item, we select the item. In this case, the item that we bought is televisions. Then we just click on okay. Right, how many did we buy? We bought 20. At what price? Right, the unit price excluding VAT was 500 because the total bill came to 10,000. So it was 500. So we've got our purchase price, but we are told that we were charged VAT. So we have to come here under item and select this VAT on purchases. I showed you how to create this item. So you have to select it. Then you have to input. You're not going to put quantities and all that. You're just going to input. If you want, you could then you divide, but you could just input the value added tax. In this case, the value added tax is 1,500. Right, so that's your value added tax. So if you do that, you've got your total bill of 11,500. So if you were to put quantity, it means you were going to divide this by the 1,500. You're going to divide it by 20. Then you're going to put that here. But we are just putting in the total. Then we save and close. This is when we are purchasing on account on credit. We're not paying cash. We're not doing a bank transfer. We are promising to pay later on. So we just save and close. Right, let's say we were buying this on cash. It means we're going to come on banking. Then we're going to write checks. All right, so okay, because I had not created a bank account, I'm just going to quickly create a bank account. Let's say I'm buying from my CBZ bank account. I'm doing this from Zimbabwe, so we've got a bank called CBZ. Then let's say this is a Nostro. We are using buying using US dollars, and for that account it's called a Nostro account. So we're going to just create quickly that bank account, right? Then save and close. So as I said, if we were buying this cash, it means I was going to click on banking, write checks. Then it was going to take me to this window. Then I was again just going to come, because I've got two tabs again down here, expenses and items. Then I was going to come on items. Then I was going to select first, I was going to select televisions. It could bring up that, right? Then I could put the quantity, right? 20,000. Then for each it was 500 for it to give me 10,000. Then I was going to come down here and again select the VAT item. Then as I said, I was not going to put the quantity there. I was just going to put total 1,500, so that I've got a total bill of 11,500. Then I was going to save and close. So by so doing, it means I've bought my items on cash, right? I'm not going to post because this transaction I did it under vendor, so I'm not going to redo it. So I'm just going to clear that. So what does this mean? This means we have accounted for 2 transactions here. Right? Let me just come back here. We've accounted for 2 transactions, right? We've accounted for this sale transaction, and we've accounted for the purchase transaction. We could come back and see the effect of what we've done so far, right? So that we appreciate. We only see that under reports. So if we were to come to reports and come under company and financials, under profit and loss, you'd find this purchase transaction that we did doesn't affect our profit and loss as such, unless if you had set up the cost of sales account, then it was going to calculate the profit, right? But because we had not. But under our balance sheet, we're now going to see the effect of what we have done. So if you were to come here, balance sheet standard, and view the current balance sheet, you'd find the balance sheet has got this, right? Okay, everything else is okay. But if we were to come here, we now have got an accounts payable of 11,500, right? Then we have got VAT on purchase of 1,500, right? VAT on purchase of 1,500. Then we've got sales tax payable. This is our VAT on sales, 3,000. Then we've got sales tax payable of 1,500. In other words, we collected more because we charged more on sales than what we were charged by our supplier. So in this case, it means we will have to pay 1,500 to the tax authority. But we are not yet done. We have to come back and see now how do we process the expenses. We've got expenses on which we were charged the VAT. So let's come back here and share this so that we see the 2 transactions on expenses. So again, on June 3, we've got 2 expenses which we paid for. We have got office supplies of 5,000, and we were charged input VAT of 750. We also have got marketing services of 3,000, and we were charged the input VAT of 450. So we want to see how do we process this on QuickBooks. So I'm just going to come back. These ones we're going to assume that we paid cash. So we are going to write checks there. So we are back here. And for us to process these 2, we're just going to come here and say banking, write checks, right? Okay, so we come there and let's assume we processed this from our CBZ Nostro. So we're going to select our bank there. If we had a number of banks, it means we would have created them and we're going to select any other bank. But in this case, we've got CBZ Nostro. So these are expenses. Under here for 2 tabs, expenses and items. So in this case, it means we're going to select expenses. Right. So when we select expenses, we click there. Then we've got 2 expenses there. We've got 2 expenses. Right, let's see the expenses that we have. We've got office supplies, so we can look up for office supplies and see if we've got such an account or something that is close to that. Yes, we've got that expense account. So we have our account. Then how much were we charged? We were charged 5,000. That is exclusive of VAT. So we're putting in that. Then we could just write probably we bought some bond paper for printing. So we're just writing bond paper. So we have accounted for this, excluding the input VAT. Then down here, we're going to now input to account for the input VAT. So we're going to select an account called VAT on purchases. We created this account, so we're going to select that VAT on purchases. This is the account that we're going to select. Then we're going to input the amount of how much? $750, right? This is not only the expense that we did. We also we could write under the memo. We could just write bond paper. This is what we bought right? Sorry, I have to type the correct spelling there. So we have bond paper there, right? Okay, so we also had marketing expenses, so we just have to account for that again. So we have marketing expenses. We look up that marketing expenses. Do we have marketing expenses there? Right. If we don't have this account, we may just, okay, we have got advertising and promotions standing for marketing expenses, and we were charged 3,000, right? Okay. So we have got this, we could say television. Let's say we advertise on the television. So we say television advert, right? So we paid for that. Then again, we were charged the VAT, and we are going to use the account VAT on purchases. That is the account that we are going to use. Then we are going to put in the VAT of $450. That's what we were charged. Then we would just repeat the description there. It's television advert. So you see, this is the advert that we paid for, television advert. So basically, this is how we account for the expenses. Once we are done, we then click on save and close, right? Now, if we were to refresh this report, you'd find our report will change now. Our report will change, and you can now see under our balance sheet, right? This okay. Probably let me just close this report and view all our reports. I'm just also going to close this. So let's just view our reporting. We come to reports, then we first of all view our company and financials, profit and loss standard, right? Then we are now going to see this profit and loss has been affected with sales. If we had set up our cost of sales, we're going to have the cost of sales, then the gross profit there. Then we've got these two expenses that we paid for advertising, excluding VAT now, 3,000. Office supplies 5,000. Of course, we made a profit of 2,000. Now let's view our balance sheet and see the effect of what we were doing. Company and financials. Then we say balance sheet standard, right? So if you are to view our balance sheet, you'd find, okay, we had an overdraft at CBZ because we had no money in the account. Then we did transfers. So now we've got an overdraft of 9,200. Then on accounts receivable for that. Then on accounts payable, we've got that. Then, okay, on our VAT, because that's where our concern is on. We've got VAT on purchases of 2,700. Then VAT on sales. And as I said, this account called sales tax payable is acting as a control account. It's also acting as an account standing for VAT on sales, right? Then, of course, the net effect of what we are paying is $300. So this is what we have to pay to the Zimbabwe Revenue Authority. If you were to view this account, let's say we want to view the VAT on purchases, we just double click and see the transactions that went in there. So we've got two transactions that we have. We've got this from Techmark Supply, then we've got this one, the expenses that we paid for through CBZ. So if you wanted to view what is in there, we could also just click on the 1,200, then it will be taken to the transaction. So basically, this is how we view and see the effect of what we were doing. Then if we were to view this VAT on sales, we will just double click on the 3,000. Then again, we'll be taken to this and view the detailed transaction. So basically, this is how you account for VAT. If you want to see the knockoffs, you could just come here on total sales tax payable, click on the $300 that you're supposed to pay, then it will give you the outline, the breakdown of the input VAT, that is VAT on purchases, then the output VAT, that is this 3,000. Then it will give you the net effect of the two, which is $300. So basically, this is how you account for VAT on QuickBooks Enterprise. Thank you for watching. See you in the next video. Thank you.